Hey guys, Angel here with the Bullish Bears team. I'm making this video today on the different strategies you can use to make money within the stock market. So since the invention of computers, it has become a whole lot easier for us as individual traders to be able to trade. We're no longer looking at newspapers or having to call an investment firm. I mean, you can call an investment firm if you'd like, but it's all right there on your computer just for you to be able to trade. So we're going to talk about some of the different strategies that you can use to be able to make money in the stock market. And the first one we're going to talk about is day trading. So day trading is when you buy and sell a stock within the same day. So it can be, you can buy and sell 5 stocks, you can buy and sell 1 stock, you can buy and sell 20 stocks in a day. As long as you buy that stock and you sell it within the same day, it is considered a day trade. Now, if you don't have a $25,000 account, then you're limited under the PDT rule to 4 day trades a week. So if you do make a day trade, even if it's you buy at 9:30 and sell at 3:55, that's still considered a day trade. So I have the stock, one of the stocks from our watch list for today pulled up, NAT. And when I day trade, I use the 1 minute and the 5 minute because I can use a 1 minute to get a good entry on a trade, and then I can use the 5 minute to sort of like just keep me steady and keep me in the trade, because the 1 minute obviously has a lot more movement than the 5 minute does. So it can be a little more volatile. So you can use the 1 minute to get in and out of a trade. You can use the 5 minute. You can even use the 5 minute to get out of a trade. I guess you can use it to get in a trade as well, but sometimes using the 1 minute is a little bit easier because you want to get a really good entry as well as an exit. So using the moving averages like the 9 and 20 are going to be super important. When the 9 is over the 20, it's bearish. When they cross and then the 20 is over the 9, I'm sorry, that would be the opposite. When the 9 is over the 20, it's bullish, and then when they cross, with the 20 being over the 9, it's bearish. And so you want to just watch these candles and see how they trade in conjunction with the 9. That's where you can also use the 5 minute, especially if you get in a trade, because if you look at this, you can see how just jumbled and messy it is. So if you're using hotkeys where you're just hitting a key, getting in for a couple of seconds, hitting a key and getting out, then you don't really have to pay as close attention to the 5 minute, but you can see how sort of messy this 1 minute chart got, especially first thing in the morning, like the first 15 minutes or so of the market. It's always going to be pretty choppy. So if you're not comfortable getting in those choppy moves, then you can just wait 15 minutes and then get in. That way you're protecting yourself. But you can see how choppy it is. You can see how that traded in conjunction with the 9. So the 9 and 20 never actually crossed, but I probably would have waited until I knew for certain with all these indecision candlesticks. If you got in around 3:15, you could have rode this thing up and it hit a high a day at 3:34. It's still at that high a day. As far as the 5 minute goes, it hasn't crossed the 9. So when you get a candlestick that closes below the 9 on a 5 minute, then that's a pretty good indication that a reversal is coming and you want to get out. It's always good to take your profits. You never go broke taking a profit, even if it's 15 cents or 20 cents. If you're trying to hit those crazy out of the park moves of getting a dollar profit, then those are the kinds of trades that you are going to take a loss on, most likely. So if you have a good 15, 20 cents, take the profit, because you can always get back in. You're never going to be stuck just taking your profit, watching it rip, and being like, oh man, that I should have waited. I mean, that's going to happen at times, but it's better to be safe than sorry. Trading with proper risk management is key, especially when you're day trading. So you're going to want to be aware of your profit and loss ratio. You're going to want to be aware of a stop loss, whether you put that in with your order or you do it mentally. If there should be a limit that once it crosses, you don't want to lose any more money, so you get out, whether that's 10 cents or 5 cents or 20 cents, depending on your profit loss ratio. You never want to risk like 20 cents for a 10-cent profit. it's much better if you risk 10 cents to make a 20-cent profit. So trading risk management is super important along with the moving averages, because you can see that this 9 is keeping this stock steady right now. If it breaks below this, then you get out. And that way you can protect your profits. Now, if you can't be making a ton of day trades every single day because you're under the PDT rule, there's another strategy you can use, and that is swing trading. And swing trading is when you hold a stock overnight. I personally really enjoy swing trading. It's just something that I found that I like to do. It's a little less stressful maybe than day trading sometimes because sometimes you can have something happen overnight where it changes the direction of a stock, where they get news, and that's happened to me before. That's not always fun, but I really do enjoy swing trading. Swing trading, you can hold just overnight to avoid the PDT rule, or you can hold up to a couple of weeks. The typical swing trade lasts 3 days up to 2 weeks, but I like to hold overnight, especially with this market choppiness, unless I know for certain that it's going to be a move, which would then require playing the patterns and knowing patterns, support and resistance, things like that. So for swing trading, I typically like to trade the bigger stocks. So let's take a look at Apple, just because Apple has a lot of patterns, or just like the bigger stocks have a little bit more of a pattern than the low float penny stocks do, because, you know, people get in and out of them, so they don't necessarily form patterns, whereas these are a little more steady. So if you take a look at Apple, and let's say that we decide that we're going to get in today and we're going to hold it like overnight. Actually, I would not do that with Apple, because you can see it's about to touch this 9 EMA, so that's not a ton of profit potential. So I personally would not hold Apple overnight until it maybe broke above this 9, because it might test this 9 and decide it doesn't like it and then reject back down. So that's something that you have to be aware of if you're going to swing trade, because that could affect your profit. You could be like, oh yeah, look at this 5-minute chart. You can see they had some news with I think the Fed spoke right around this time and everything took off. So you can see that and be like, oh man, I'm going to get in because Apple is going to keep going up. It looks like there's a rally and yay, I'm going to get in. And then it touches this 9 after you got in. Let's say you get in now at 179.14 and it goes up to 180.93 and rejects. Now that's, you make a dollar-ish, almost $2 move on an overnight trade. That's not bad at all. But if you want to trade for a little bit longer or have a little bit bigger of a profit potential, then especially for swing trading, because it does take a while, not a while, but the typical swing trade, like I said a little bit earlier, is 3 days to 2 weeks. So if you're holding this and it goes against you, then you're kind of sort of stuck when knowing that, oh, it's kind of close. It's these indecision candles close to a moving average line. Maybe that's not the best time to get into a swing trade. So trading proper risk management isn't just for day trading. It's also for every style of trading out there imaginable, because the goal of a trader is to make money. And so if you're not trading using proper risk management or sticking to a trading plan or having a goal, you're just going to be willy-nilly about everything, and that's going to cause you to blow up your brokerage account. So we can even take a look at my favorite stock to trade, which is NVIDIA. And you know how much I love to trade NVIDIA if you watch any of my videos. And you can see that there's a gap here from 170.81 up to like 196. And there's this saying, all gaps must fill. So you can see that it looks like it's trying to start to fill that gap. And you could think, oh man, I want to get in that move to fill that gap. The stock is currently at 162.20, and it's going to fill that gap up to 196 something. That's going to be a huge profit. That's amazing. So I'm going to get in, and I'm going to hold that for the next few days because I just know that gap is going to fill. That would be a bad idea because you can see, again, moving average is super important, that it touched this 9 EMA today and it's rejected, and it had a little bit of a recovery just because of the news that the Fed gave today, and now it's falling. It's just so indecisive. So knowing what candlesticks are is super, super important. So candlesticks can give you a lot of insight into how traders are feeling that day. So we've talked about day trading, we've talked about swing trading. Now let's talk about options trading. So you can also day trade and swing trade options. If you head over to the trade button here on Thinkorswim, options chains pops up. So calls are the bullish side, puts are the bearish side. You can see with open interest how many people are interested in trading these options. You can see volume, you've got your bid and ask, you've got your Greeks. You can even take these calls and puts and put them into different strategies like spreads or iron condors or iron butterflies and limit your risk. Now there's more advanced, but there are a lot of options for you to be able to make money in the stock market, especially with options trading. And so what you can do, especially if you don't know how to do any of this, is open a Thinkorswim account and you can paper trade in there and you can practice and just get good at the different strategies before you put real skin in the game. And you can head over here and read our blog post that corresponds with it, Stock Trading Strategies That Work. The link will be down below. And if you need to learn more, you can head over to our courses and take our candlesticks courses. We've got a day trading, a swing trading, an options course, even a Thinkorswim course, so you can learn how to set up your own paper trading account. And if you are new, you can head over to our Facebook group, and if you have any questions, you can post it right in here, and there are people from all over that will be willing to help you out. You can like our fan page and see any of the posts that the mods and the admins post right in there. It might be a little bit easier for you to see as opposed to this page. And if you like this video, please like, share, and subscribe to our YouTube channel and follow us on social media. And we hope you have a great day, and I'll see y'all later.